I'm Julie and this channel's Happy on Monday. It's for people who want to save for retirement but don't make a lot of money. In this video, I'm going to share medical health insurance options for people who want to retire early. If you retire before the age of 65 when Medicare kicks in, what options do you have? Insurance is expensive and you have to account for it. Medical insurance is the biggest hurdle for early retirement. I've done a ton of research about this because I want to retire at 59 and a half, and that's 5.5 years before I qualify for Medicare. Right now, my employer pays most of my medical insurance premiums. They're about $1,000 a month and I only pay $40 a month. After I retire, that goes away. If you plan on retiring before 65, you have to budget for medical insurance. So what are the options besides winning the lottery? Number 1 is COBRA. You can choose to continue group health benefits through your employer for a period of time after you leave. COBRA extends anywhere from 18 to 36 months. COBRA is expensive. All health insurance is expensive. COBRA can be cheaper than the open market if you have a lot of taxable income. But if your taxable income is lower, COBRA may not be the best choice for you. Number 2 is ACA, American Care Act, also known as Obamacare and Marketplace. ACA can be much cheaper than COBRA if you qualify for subsidies. You can also keep your premiums down by choosing a high deductible option. In 2023, you'll typically qualify for subsidies if your taxable income is between $13,590 and $54,360. Remember, that's taxable income. It does vary by state, and premiums will also vary considerably by state. You can look up your cost online for your state and your income. I'm going to put the links below. If you have after-tax accounts like Roths, CDs, high-yield savings, and I-bonds, that cash doesn't count towards your modified adjusted gross income. So if you plan right and keep your taxable income down, you should qualify for subsidies. One side note, ACA often costs more for copays and deductibles, but nothing close to what you would pay for COBRA. In other words, have enough cash reserves to be poor on paper so you can qualify for those subsidies. Number 3 is health share. If you're healthy, you could consider health share programs like Zion, Crowd Health, Medicare, and Christian Health Ministries. Zion Health Share and Crowd Health do not have religious requirements. Crowd Health is the one I've looked into after a financial advisor talked to me about it. With Crowd Health, you can see any doctor. When you go to the doctor, you ask for the cash price and you pay the bill. For bills greater than $500, you commit to funding the first $500, and then you can submit a funding request to Crowd Health. Also, for scheduled services, Crowd Health can call your doctor and negotiate prices. Christian Health Ministries and Medicare work the same way, except you must be a Christian, attend worship regularly, have a Christian lifestyle, and actively follow the Bible. Number 4, another opportunity for keeping medical costs down is contributing to a health savings account, an HSA account, or a health reimbursement arrangement, an HRA, while you're still working. An HSA is a tax-advantaged savings account that allows you to exclude contributions from your income. It also allows tax-deferred growth, and you can withdraw funds tax-free when you're paying for qualified medical expenses. An HRA is a tax-free health reimbursement account that you can continue year after year, unlike a flexible spending account. It can be used to reimburse qualified medical expenses after retirement. You can also submit older medical receipts for reimbursement. A lot of people keep a medical expense folder with older receipts just to cash in after retirement. I have an HRA, so I'm starting a folder like that. Number 5 is you could consider getting a part-time job that offers health insurance. Starbucks, Amazon, Walmart, Lowe's, Costco, IKEA, UPS, Delta, Chipotle, and REI are just 10 part-time jobs that offer health insurance. I know there's more than that too. Number 6, one last idea is international health insurance. It's usually cheaper than comparable U.S. health insurance. If you move to a foreign country in retirement, your expenses, including medical expenses, could go way down. This depends on where you move. The top 10 countries with the best healthcare systems are Canada, Denmark, Sweden, Norway, Germany, United Kingdom, Japan, Australia, the Netherlands, and Switzerland. As much as I love world travel, I don't think I could live away from my family and my grandbabies full time like that. So while it's not an option I'm considering, it could be an option for some of you. Right now I'm healthy. For me personally, if I were to retire right now, I've estimated that COBRA would cost about $700 a month or more. Crowd Health would be about $350 a month or more, and ACA, if I keep my taxable income down and qualify for those subsidies, would only be about $150 a month. I just have to plan right and keep that taxable income down. I also have that HRA account through work that I can use to pay for qualified medical expenses and health insurance premiums in retirement. At this time, I'm leaning toward ACA, but things could definitely change by the time I retire. The future of ACA is up in the air. I really hope it's still there when it's time for me to retire. Another subject related to medical insurance is long-term care insurance. Brand new in my state, July 2023, employees must pay a new payroll tax called the Washington Long-Term Care Tax. This will tax people's wages to pay for long-term health care benefits. The law is mandatory and will cost 58 cents for every $100 earned. That just started, and I'm hoping to retire in 2 years. So I feel like it's not going to do me any good. The only ways to opt out are 1, if you live outside of Washington, 2, you're the spouse of an active duty military, 3, you have a non-immigrant work visa, or 4, you're a veteran. I think I'm just going to lose that money. Come on now. One thing I'm considering that is again controversial is not getting long-term care insurance. If I stay healthy, I might not get it. The average person lives 3 to 4 years in long-term care. Long-term care could cost around $4,000 a month or $48,000 a year. If I ended up in long-term care, I could sell my house and that would cover like 7 years worth. If I don't end up in long-term care, then my children get to sell my house after I die and keep that money. Long-term care insurance would cost me around $3,000 a year and would continue to rise in cost. The estimated cost for care in the last 5 years of life is $367,000 for people with dementia, $234,000 for those without dementia, and on average, Americans will pay a total of $172,000 for long-term care without insurance. If I paid for long-term care insurance for 20 years or more, it seems to me like that could add up to almost that much. So I just don't know if I want to buy long-term care insurance. What do you think? Comment below and tell me what you think. If you're going to retire early, it's important to know what healthcare options are available to you. You should look for a plan that meets both your healthcare needs and your budget. No matter which route you take, it's often valuable to get help from a professional health insurance agent. These are agents who specialize in ACA and Medicare. The good news is that agent commissions are typically already embedded in your premium, even if you don't use an agent, so there's no increase in the amount you pay. The key is to research your health insurance options well in advance of your retirement. Thanks for watching. If you found this helpful, please like and subscribe. I'm going to leave you with a quote. I am thankful for my struggle, because without it I wouldn't have stumbled upon my strength. Hope to see you again soon.